Hello, good morning, guys. It's OTFX. So, for this video, I want to talk about SLK, structure, liquidity, and key level. Basically, that's what it means. Okay, expand my charts. SLK, structure, liquidity, and key level. Basically, that's what it means. S for structure, L for liquidity, K for key level. Okay. But you see, this strategy, I don't want really go broad into this strategy because my aim no be to start to dey teach or to start dey explain strategy all from beginning again. My aim for this particular video na just to show, to expose one simple logic wey dey work for inside this SLK thing. But before I dive in, e get key levels wey we need to dey use. Okay, let me use this tool. We need to use A-shape key level. Sorry. We need to use A-shape key level. We need to use V-shape key level. And then we need to use open close key level. How that open close key level be? When you see two candles like this, two consecutive. If it's bearish open close key level, you are going to see two consecutive candle like this, two bearish consecutive candle pushing like this. If it's bullish, vice versa. Okay, now these three key levels we need to use for this strategy first on a higher time frame. So what you go do now, make I just show now straight from charts. This thing no really dey complicated, because that's why I no want explain too much things inside wey go come dey confuse person. No be confusion we dey find wetin go work, wey we go dey use, wey go dey bring money, and this na one of those things. So if you like am, if you say na strategy wey you fit vibe with, you fit just put am to test, back test am. You understand? Just few back testing to understand it, and then you work with it. So those key levels now, when I dey tell you, so see here, this is an A-shaped key level. See here, this is an A-shaped key level. You see here, anywhere you see body close, two body close of candles like this, na A-shaped key level. You see am, A-shaped key level. Then if it's happening from the downside, na V-shaped key level. You see am, V-shaped key level. You see am, V-shaped key level. Why would they call am V-shape or A-shape? Because if you do like this, it come like this, go like this, it look like V. Come like this, go like this, look like V. Come like this, look like A. You understand? Now why they give am that name, A-shape, V-shape key level. You understand? And if you look this place now, another thing wey go make you know say na V-shape key level, go line charts. You see line chart, you see am, the same thing, V-shape key level. You see the second one, V-shape key level. Okay, so you see the one wey dey up now, see am, this one now, A-shape key level. You come back like this, you go see am, it dey always dey stand like A and V. You see am. Now why would they call am A-shape and V-shape key level? Good, having known that, the next one now na open close key level. See am, two consecutive bullish candle to the upside. You see am, for where the first one close, the second one open, na key level. We dey call am open close, because na here the opening price of the new candle dey, na here the closing price of the previous candle dey. So na open close key level. So here now na another key level on its own. But you see this type of key level, you no go see am for line chart. You see am, if you go line chart, you no go see am. But an open close key level on a higher time frame, if you go to a time frame lower, you fit see am as open close key level or an A shape or a V shape key level. You see am. So this thing now na from 4 hour, now I mark am as open close key level. Sometimes when you go to 1 hour time frame, you see it as open close key level or an A shape key level or a V shape key level. You understand? In this scenario, na open close key level is still B. This same open close key level now, if you go to 30 minutes lower, wetin you dey see? A shape. You see am, A shape key level. So that is why you no need ignore this place as key level, because na open close key level they call am. You get? So having known that, we have V shape, we have A shape, we have open close key level. Good. So now let me just go straight to implementing the strategy. This thing, you need 3 time frames or max 4 time frames. Okay, you need daily time frame, you need 4 hour, you need 1 hour. That is what you need. You understand? Just rare cases you will need 30 minutes or 15 minutes just for clarity. Now let's go to daily time frame. I want us to look at what happened here. We go use many scenarios take do example. You understand? Now let's say the market dey like this, all these things never print. You get this candle, for example, this candle come print. This candle, if you look go here now, you go see say this candle, like say e enter fair value gap, abi no be the fair value gap we dey look for this strategy. Wetin we dey look na key level where price go. See here, let me use this. You see here na key level. You see here open close key level, na key level. Every candle wey dey print, e get where e reject. You no understand? Every candle wey dey see so, e get where e reject, e get where e target. I go explain am later. This particular thing wey I talk now, I go explain am later inside the H4 model 1 strategy, refined strategy, wey I wan do small video on later. Every candle wey you see say e dey print so, like this candle now na bearish candle, e open here, e get where e go. You no understand? See am, key level. If not here, must be another key level. E get where e go, and as e dey come back come close, e get where e target. If not here, e go be another one. You no understand? See am. So you see this candle print now, e hit this key level. Okay, let's work with this one below. Let's not work with this one, because sometimes due to some brokers, some data feeds, if you no really touch this one. So let's work with this one now. See open close key level where this price go hit. Now, okay, I think I'm going to need this too, so that I'll label it properly. Yes, let me mark it like this. Good. I'll mark it as DRD. You know what DRD means? Daily rejected daily. Not rejecting daily, rejected daily. Now two different things dey here. Wetin I mean now be say, see this day now, na 10th of March, Tuesday. That same Tuesday, market open here, e go up, e go hit this open close key level, e come back, e hit here, e come back, e close. You dey see am. Where e go hit, either you look am as here or you look am as here. You know, see am, no be coincidence with this thing. See am. So daily candle, after e close finish, you can now say that daily candle rejected a daily key level. Which daily key level did he reject? An open close key level. He must look for a key level somewhere to react to it. Every candle must look for a key level somewhere to react to it. So this daily reject daily. You see, daily reject daily. Now you need to wait until this day where they reject this key level to close first. You know, understand? Daily reject daily and close. Another thing again we go make the journey sweet. From here now, you see say you get candles where dey here where e go sweep as liquidity. You see price swept liquidity, or let me just say price attack liquidity to rebalance an old imbalance. This is an old imbalance. Do you understand? This is an old imbalance. Price attack liquidity to rebalance an old imbalance at where? At a specific pricing level. Do you understand the statement? Attack liquidity, rebalance an old imbalance, because e no rebalance this imbalance finish. You no get? See, from here now, e get as you go do another analysis now. This thing now will look like fair value gap for you. You no get? E no rebalance and finish. Why? Because e get objective to reject from a specific pricing level, which is here, or you look at it as here. I think you can look at it as here because e really touch am. E touch am. So we have price attacking liquidity, rebalancing an old imbalance at a specific pricing level. Do you get? And then it come back, it close. This thing now na information, valid information the market they try tell you for here. Say okay, there's an old imbalance here. This old imbalance is not a must. It's not a must. It's not a must. As we dey look other examples, you go see am. You go see am. Price attack liquidity at a specific pricing level, rebalance an old imbalance. It come back, it drop, it close bearish. This is an indication that price is going to push lower. Do you get? Now, as soon as, forget about this fair value gap now. Let me delete it. I don't want to make things complicated. Just mark a key level and wait for a daily candle to reject any of the key level, or any of the days. Wait for that day to try to spot the key level it rejected. So we rejected this key level. To make am sweet, we can attack liquidity here, grab some liquidity before rejecting this key level, come close bearish. Now, as soon as it close, what do you do next? Go to 4-hour time frame. You know, understand? On 4-hour time frame, you want to see something like this. This is, let's say, price doing this. Price hit a key level, reject the key level. You want to, on 4-hour time frame now, you want to see a break of structure and a pullback, some sort of pullback like this, then entry to sell. Do you understand? If you don't understand, you will understand it when we go to 4-hour time frame. So this is what 10th of March. Now let's go to 4-hour time frame. On 4-hour time frame, you can see I have my session break on here just to help my explanation. If you look here, price attack all this liquidity. You don't see which day price use attack the liquidity? On 10th of March. This is 10th of March. From here to here, price use this day expand, hit this liquidity, come back, go down, come back, hit them again, come back, come close here, bearish. Do you get? Now wetin I want make you check be say, see wetin price they do as they come. Price they come, e reach here, e pull back, e expand again, abi like this, before e come break, come pull back like this, come dey come like this, come dey come like this. Do you get? Now if you check am, price was doing what? Breaking highs until after e hit that key level, price come begin dey break lows. This is what? A breakout. This is a breakout. This is a breakout. You understand? This is also a breakout. This is a breakout. Damn. This is also a breakout. Do you understand? Let me clear this thing. If you no understand, if you no clear for your eye, go line chart, go confirm am. You no understand? Go line chart. They say the line chart price they come all the way from down, come back, go up, come down, go up. If the momentum is still bullish, wetin price suppose do? E suppose come down like this, continue dey go up. You no understand? To show you say the bullish momentum don finish. E finish for where? E finish on top of that key level wey e reject. Come back, come break, go back, break again. Now in this scenario, na one break you dey find. You understand? So this day now need close, abi? And wetin you dey see here, e close here. 10th of March close here. So back to daily time frame. I want us to understand this thing very well. That's why I'm not rushing it. The next example now, we can start rushing things. We have daily rejected a daily key level and close. Do you understand? Now, on a 4-hour time frame, you are supposed to see a rejection and a break of structure. If he give you, sometimes it will give you rejection, e no go give you break of structure yet before that day go close. Wait for that break of structure. Very important. A rejection and a break of structure. Do you understand? Excuse me. After that rejection and break of structure, then you now need to work with the information you have here. Which information you get here now? If you look here, we get fresh A-shaped key level from 4 hour. I go name am H4. We get another fresh H4 key level here. I name am H4 again. You understand? H4. Now, we no just need this one. Let's say all these things never print yet. All this candle like this never print. Your decision now from the moment this candle close at night. If you check am again, you go still see here as what? A 4-hour key level. You see am? A 4-hour key level. If you check am again, this particular place where e do break of structure, na another 4-hour key level. Na the worst case be that, to mark all the key levels, abi? Good. I just want make you understand something. No be say you go dey mark all these key levels continuously. After you don spot these key levels now, go 1-hour time frame. Now ask yourself, if you look, you see the same thing dey here. The same day hitting key level, giving us a break of structure. You see where the break of structure dey now? You see am? Confirm, clean break of structure like this. You see am? Clean break of structure. After this break of structure, what next? You see this key level where dey here, where confirm the key level, the break of structure, you go delete am. Why? Because you need work with key level. Price need gather some liquidity. Price, you need consider liquidity inducement before POI, before price will expand. You know, understand? Now, for this place now, the liquidity no really clear like that for here. But if you check 4-hour time frame back, you go see am. How you go take see am? See am. Market print 4-hour candle here. This 4-hour candle, e no touch any of the key levels. It go serve as inducement. It go serve as inducement here. You know, get markets can't go up. most cases market can't go up now. You see this key level now, market fit decide expand for here, but you see this particular pattern where I dey explain, so you need to learn to take trades from mostly apex levels. What I mean by apex levels, like the barest discount level to sell. I don't know if that English is correct. Discount level will make sense, we no go give you big SL to sell. So in that case, I'll delete this thing. You see, Amber? Now I consider this place now as what? Another liquidity, another 4-hour liquidity. You get your choice. If you go back to 1 hour time frame now, you go see am. You know, see this 1 hour now liquidity, e far from all these places, so you no go like when they take entry. You want to see liquidity not too far from your POI to execute. Now here break of structure happen. Now here break of structure happen. Okay, so that is why I know they use this candle. Instead, I dey use the other 4-hour candle. This now when inducement no really clear for your eye. If you go 4-hour time frame, you need consider one full 4-hour candle as inducement. Yes, it dey happen like that. A full candle, a full one candle can serve as inducement on a higher time frame. Yes. So the new candle open now. Wetin you see? E go up, e hit this key level. See this key level now, e no dey fresh. E no dey fresh. This open close A shape, e no dey fresh. Price break am, don't too much reaction. You no understand? This one now, me I no go take am. Instead, I go look for fresh key level from this drop here, wey dey closer to this inducement. So for 1 hour now, I dey see what? I dey see 1 hour open close key level here. H1. You see 1 hour open close key level here. Now e dey closer to this inducement candle. Inducement level here. You get? And again, see fair value gap here. You know, understand? See fair value gap. So the likeliness of price doing what? Coming to this side, attack this liquidity, rebalance this fair value gap at a specific pricing level. If there was another key level here, or consider am, but now here it is. Attack liquidity, rebalance and hold imbalance at a specific pricing level. See am, price come pick order, e dump. You get? Now I'm not looking at this key level. I'm not looking at this key level. If you come back here, you see it. Okay, why am I not looking at these key levels? Because they're far from inducement. I don't know if waiting I talk here makes sense. It's far from inducement. See the key level I dey use. In this case, you can also use this key level also, but it's only positions you to have what? A bigger SL. See am? It positions you to have a bigger SL. I no wan rush this video because the message wey I wan pass dey more important than just rushing the thing. You go like watch one video, understand the thing, make you rest. You no get? You no go wan dey get big SL like this, big SL like this. Okay, so I pick here for entry, and then instead of picking this V shape here or this A shape, I pick here for entry, and your SL, put your SL here. E get why. Get why. Give the market room to breathe. The market fit still expand, come here, tap here. If you see come tap here, it does not invalidate this setup until price takes out this high. So what's the essence of you doing this? Now you get they control the market. When FXCM can tell you one thing, Wanda can tell you another thing, Pepperstone can tell you another thing. You know, get? Put your SL here. Now take out these levels. Take out these levels. Take out this level. this is your entry. You know, get price, attack liquidity, rebalance, and hold imbalance. You must not always see this imbalance, but that is just the simple logic. Attack liquidity, rebalance, and hold imbalance at a specific pricing level. You know, see this one. Why you know do like that first example where I've been the show for higher time frame? Why you know just enter the fair value gap 50% drop? Because it get objective beyond 50% of the fair value gap. You know, understand? It drop. Now, where you go target for your TP? First of all, as price hit here, come back, do break of structure, they reverse. From that place where you reverse, now your TP1. That one now what? Internal range liquidity. IRL. Okay? Now, your TP2, from where price do you turn, go reject the daily key level. Now be your TP2. See, I'm here. That is your what? External range liquidity. You see, I'm neat. It takes you 24 to 40 to 23 days. Yeah. 48 to 72 hours. 3 days. You see the setup. Now, that is as simple as that. When a daily candle rejects a daily key level, if it has liquidity to grab before rejecting it, fine. When a daily candle rejects a daily key level and close, you go to 4-hour time frame. Okay, from the reversal, look at that week where it form, where it turn, come reject here. Now your external range. From the reversal now, you go from the rejection rather, you come to 4-hour time frame. You are going to see a rejection and a break of structure. Look at it, rejected here at first, no break of structure. It came back, hit the level again, to sweeping this place, rejecting here by giving us a new break of structure. Then the new day open, traded back into the zone and expanded. Do you understand? Now you can see, if you see something you know, guys, if you take do, we be say you know go they see am. See here now my eye don't they catch model 1 H4 candle. See am, a sweep of previous candle high. If you check out now, it will give you what they call a model 1 entry. But you see, one edge must have advantage over the other. You know, understand? See this one now, as you catch this thing now, this setup now, they tell you, say, put your SL here. This strategy. Model 1 now go tell you, say, put your SL on top here. And you go see, say, sometimes you go chop your model 1 and go enter here when they go down. And they happen. So just obey the rules of every strategy. You get entry. Model 1 now go they hop out from here or they hop out from here. But this strategy now is giving opportunity to push lower. You don't understand? So it just be. So a daily candle rejected a daily key level on 4-hour time frame, you need to look for a rejection and a break of structure, a fresh rejection and a fresh break of structure. Then frame your entry from there, bam, to the downside. That is all. No complication. You understand? If you go to 1-hour time frame, you see it. There's no point in going to 30-minute, 15-minute time frame unless if the setup not really clear for your eye. You know, Sam. You see, one of the reasons why you need to give your market breathing space. See, on 30-minute time frame now, is showing you clearly that there is a 30-minute order block here. So what if the market decide to extend to tap here? You go, they do tight SL. It will come out you. You don't understand? Because these lower time frames can be tricky. And exactly what happened here, after sweeping Asian liquidity, Asian high, market expanded to the upside, tap into our key level, and boom, expand. See, good. So that is how you trade this model. Just look for a daily key level. Okay, a daily key level. Now there's always a rejection somewhere and expansion somewhere. You might want to ask how you want to take know which of the one. You know, get now there the work day. You know, get as you want to take know. Just mark any candle where you see and try to figure out where it rejects. Let's say you mark this candle now. Where it rejects here. Let's use here. You see this candle, it rejects here. Daily rejecting a daily key level. Abi? But the difference is that if you go to 4 hour time frame now, you will not see, okay, you will not see the breakout. Mind you, after the rejection, is not this breakout you'll be looking at. You know, understand? Is the breakout from the previous structure. See, highs, lows, highs, lows. You get? Don't go and look at this breakout as a rejection and a breakout. Oh, this one a trap. You know, understand? Price need to break a previous high will lead into that key level. So in this case, we did not break above this high. If we had broken above this high now, you go say, okay, daily candle rejected a daily key level. You wait until you get a breakout to the upside, and then boom, your apex entry and expansion. We did not break this high. So this is not a breakout. Don't do daily, reject daily. You want to see a rejection and a breakout. This one will be breakout. Or everything we did here. Now, if this breakout go hold, everything we go dey here now inducement. Don't use this one. Use this. Use what is coming from here before price attack key level. You know, understand? The same thing here. And that's why she say, okay, daily reject daily. Yes. At the end of the day, did it form? No. It didn't form a setup for you. That's why if you look here now, if you look here, daily reject daily. You know, understand? I did not wait for this breakout. Which breakout did I use? The breakout that was coming before as price hits key level. Boom, breakout. Boom, breakout. You understand? Don't use this break. If you use this breakout, price no come back here again. So that's so it just be. I believe this video now don't declare enough. This explanation don't declare enough. Let's quickly explain another example. Just mark now there the work day on a daily time frame. Just they look for where candle they go. Where they carry and they go there. Where they go reject. See here. See this open close key level. See this open close key level. You come back here. What do you see? A rejection. What do you see? What do you see? Friday 13th, daily reject a daily key level and close. Do you get? Reject a daily key level and close bearish. The next thing, sharp, go to 4 hour time frame the following day. You know, understand? Yeah. This day, rejecting this daily key level and close. You wait here and see what will happen. You know, understand? Sometimes the setup will use 1 day form for you. Sometimes you use 1 or 2 more days form for you. It rejects here, it close. Ever since it rejected, price failed to break below. You know, understand? Just be patient, they observe. You go see, you go catch the trade, you go know where the market they go. As it reject here, it close. What you go wait for next? See, low, high, low, high, low, high, low. You get? So where the breakout they where you go they find? Now here. You know, see, and here be the breakout where you go they find. So if price no break above this high, don't even consider looking for buy setups. You know, understand? What do you see? A daily rejecting a daily key level and close. On 4 hour time frame, you want to see a rejection from this key level and a breakout. And that is what we have here. A rejection from this key level and a breakout to the upside. Now, after the breakout, what next? Now, you look here. For if you are just starting to understand this strategy, maybe you've not actually come across it before, just mark key levels where you know say if you mark go lower time frame, it go dey clear for you. See here, mark here as your 4 hour. You know, understand? H4, H4, mark here. You understand? Mark here, mark here. By the time you get used to it, you understand these things. You know, understand? Because if you look here, line chart is your friend. As price reject here, na V shape dey here. As you go up, na A shape dey here. As you come back, na V shape dey here. Abi no be so? You can't go break structure. So these are what? Fresh key levels. A fresh A shape key level, a fresh V shape key level, a fresh V shape key level. Do you understand? Now why you need mark all of them if e no clear for your eye? You no understand? Everything wey dey here na surutu, na noise. See am? Liquidity. And wetin you see here, liquidity now don form close to all these key levels wey you dey look for. Abi no be so? Now go 1 hour time frame. So for 1 hour time frame now, expand your chart. Look am well well. You go see. After the breakout, a rejection on a key level and a breakout, price come back, form inducement, you go up. This scenario, use one full day, they form inducement for this setup. Use another full day before a trade come back. See inducement, price did what? And see fair value gap. See another fair value gap inside here. See all these H4 key levels where you mark here. You know understand? Price did what? Price attack liquidity, rebalance and hold imbalance at a specific pricing level. In this scenario, price mitigate 2 key levels. See, you use this one, you use this one, you expand. So the closest now to this inducement level now, where you could take as your entry now, you can take on this one here. You see, say it don't make sense now. So all this line where you draw now, you can comfortably delete this one below. You know, get. But the fact say you delete this one below now, it no mean say you can't use tight SL. Normal, you want take risk. After this one, if you just do it like this, you know, get, or do it like this. But me, I will not advise that. Why? Because there's still a fair value gap here. Price may decide to dip inside, mitigate this V shape here, and expand. You know, get. See, no matter how your setup form, just know say stop hunt is real. Is real. So avoid it. The only thing that invalidates your setup is here. Just carry your SL, put them here, either here or put them here. You know, understand? If he give you big SL, leave them. Now how the setup take form be that? Collect waiting you get to give you. Attack liquidity, rebalance and hold imbalance at a specific pricing level. See am? You dey see this 4-hour key level strong. You see this smaller A shape key level where price break above. Your choice. You can pick here, you can pick here. If you pick here, obviously you go down the reason and say price don't go leave you before it can come back. And if it actually go leave you before it can come back here, can tap this one go. That is to show you say even for here, you take entry here, you know they wrong. You know understand? Pick your entry. Now, your next target is what? This is your internal range liquidity where price go sweep as your TP1. Me, not to concern me, concern TP1 anything. I will just straight collect the RR way I define. But if you be person where they take partial, take your partial here. You know understand? Your TP2 is where? Now, if you go back to daily time frame, you check. Out of everything will happen here, price no reach here until this specific candle. Now price can't decide to reject here. Reason I'm now, where go be your external range liquidity? No be here. Now this high go be your external range liquidity. But I'll not advise you to wait until price takes out external range liquidity here because it's far. Anything can happen in the market. Collect what the market is offering you and go. You don't understand. Collect. Now if you look here now, this one don't already play out, enter here. There is possibility that as you buying here now, if you buy they go, if you can't use here, if you can't sweep here, you go can't use here, do daily reject daily, you go give set or you go sell. If you can't use here, use anywhere. So there's no guarantee that this sell now will hold until this buy will hold until get to this place. So collect with the market one give you reasonable RR, they go. As a matter of fact, this one now can from here serve as a new setup. So this one now can give you daily reject daily key level. You know, get on 4-hour time frame, you get what? A rejection and a break of structure. So in this scenario, we want to say a rejection here, and where's the break of structure? It did down here. So this one far. So you see, ideally collect within the market one give you reasonably run. See 3RR here. So if you they do internal range collect, if you they do external 3RR, this one no be your fault. Say the RR no big. Now how the setup take give you, and it's better you do like this to be safe than you hit your SL can't go your way. You don't understand. 3RR neat. This was just this Friday. This Friday, 19th of March. You don't understand. And observe where the market want to go. If this market now drop, come break here now, this setup don't confirm as what? As daily reject daily and it close. So you need to wait for a breakout, then setup go form to sell. Now why you see say sometimes my person go do analysis and your TP day up, market go just come like this, pick your order, just go on like this, do go up small, go still come reverse. Why? Because the market don't change bias. Collect wetin wan give you the go. You know get. Now I go clear this chart now so that we'll look into other examples. I'll mark this one. We no go need look all these ones from 2nd of March. I go erase them. Clear charts from 2nd of March. This 3rd, 2nd. So from here now, confront. We no go look here again. Let's now go back to daily time frame. On daily time frame, just look around. There is always a candle rejecting a key level. If it does not give you a rejection and a break of structure on a lower time frame, forget about it. If it does not give you, forget about it. And so it just be. No too much complication. See this one. Open close key level, a rejection. You go to 4-hour time frame, check. Is there a rejection and a break of structure? You check. If it form setup, good. Like that. See here. Open close key level. See a rejection. You go and check. Is there a rejection and a break of structure? See here. A rejection. So that is your job on this strategy. Okay. Every day, try to identify, to spot where the candle is going, where is it coming from, and where is it going to. See here. A rejection and a break of structure. Mind you, let me use this one now to explain what I just remembered. See here, you can say this is daily reject daily, right? This daily reject daily. Which day is this? 22nd of January, rejecting an open close key level, right? Go to 4-hour time frame. You see, this day rejected, this day go up. As you go up, wait till you see break of structure. You see, break of structure. As e break structure, e come back. No, e no come back. If say e come back, you go frame your setup, your entry from here. We have open close key level, A shape, V shape, V shape. You need to form inducement close, you frame your setup, you buy. E no come back. As e no come back, wait till you see the high wey e create before e reverse come reject that key level, which is your what, your external range liquidity here. Now in this case, price don already burst and dey go. So is there any need for you to wait until price come back here? No. If you wait, SL go touch you. See am. So no need. If price no come your entry, e don go take external range liquidity, go leave am, go look for another candle. If this price intended to tag you along, as e close give you break of structure, as this one open, e no go just come like this expand. If you open, e go come down, come grab that order, expand. You know, yet you need to dey very very careful. No go mark rejection and a break of structure dey wait for how many days, abi how many weeks before price go come mitigate your entry. They dey everywhere. They dey everywhere. See am. See am. Let's see if this one form well, give setup. A daily reject daily 12 January. This video don dey long. I no wan make it too long like that because the main thing I don already explain am. Na just back test be this. Okay, you see am. A daily rejecting a daily key level and close. Where is the structure to break? Here you go. The same structure to break na come be the external range liquidity. Avoid am. As you go break am. Where if you take out external range liquidity, wetin you wan come dey target next for TP? Wetin you wan dey target? Avoid am. As price come, you know, see bulldozer and dey go. Avoid am. This one now no be your trade. So this one now, you don't necessarily need to dey hold on to one pair, because sometimes if it dey take you a bit longer for you to see the setup wey go form very well. So in this case, just take like a few more pairs and be looking for that specific, signature in the market. Let's see. Do we have something here? A daily candle rejecting a daily key level. Damn. Sweeping this one, rejecting a daily key level. Okay, let's see on 4-hour time frame. What do we have? A daily candle rejecting a daily key level, boom, with a break of structure. You see, I think we have a trade here. This is the break of structure. This is a break of structure. A daily candle rejecting a daily key level with a break of structure, and it closed what? Bearish. Okay, it closed bearish. After the closure, you need to see price take out some liquidity and give you your entry. Okay, and see what can happen here. After here, what you see? Key level. Just for clarity's sake, it no go be bad idea if you mark all your key levels, then try go dey look for clean setup. See here, key level. If price is going to come back to this place, it's going to use this candle as inducement to this high. You see, as inducement to this high. If price does not want to come back there, it's going to look for its entries elsewhere. You can see key levels. You don't understand? Now, in this particular scenario, this thing did not actually form well. Instead, it just can't use this previous, use the whole of previous day, take do inducements. Take do inducements. The whole of previous day, take do inducement. The new day, attack liquidity, rebalance and hold imbalance. You come back to 1 hour time frame. Let me set up this yeah. See, use the whole of previous day here. Take do inducement. Attack liquidity, rebalance and hold imbalance at what? A specific pricing level. You see. in this scenario, it did not even bother to come to the upside. So this one now, they give you two setup. You can wait for it here to come and attack this liquidity, and you sell here. Two setup, two entries rather from one setup. See one here, see second one. This one now, how this one take for this one. Even me myself, I feel miss this trade because I no go like take entry come dey carry long sell like this. I feel miss this trade because now here my eye go dey. My eye go dey here. See this one now na inducement. Now here my eye go dey, and it no go be bad idea. Price fit just come like carry 1 week like this, come grab this thing they go. But unfortunately, you just use this one, take expand, travel straight to external range. You know, see 5-6 RR 2 days. If markets just grab order for this strategy, it don't go be that. Now so it could just dey fall. So just go to your chart, backtest it. They dey everywhere. It's not only on Euro USD, they dey everywhere. If you come to USD card, AUD USD, you see them everywhere. Okay, this is USD card now. This USD card. Let's look at this now. Let's look at this as useless as what's happened here. Yeah, they look like wetin no go even hold water. Make I use this line. Yeah. See, daily candle rejecting a daily key level. Daily candle rejecting a daily key level. You see, this one now sweet well because as they reject, it carries on liquidity join body. Yeah, as inducement. Carry liquidity join body. So daily candle rejecting a daily key level, close bullish. Concern you how it take close. So far say you reject key level close, go to 4 hour time frame. You want to see a rejection and a break of structure. Yeah. A rejection and where you see this one now, break structure immediately until the following day. Before it breaks structure, a rejection and what? A break of structure. A rejection and a break of structure. If this candle close below this place, this setup would be invalid. As a matter of fact, if you even miss and save, if you even consider and say you don't take out the internal range liquidity, but for the sake of external range liquidity, which is this, you might still want to be in the trade. You don't understand? Yeah. For the sake of external range liquidity, you might still want to be hoping that this trade will play out. See, a rejection and a break of structure. Now, after that rejection and break of structure, look like this. See, a fresh key level. A fresh H for key level. You don't understand? Mark the key levels you see. Yeah. This one now as QM. Get fresh key level. See, this QM now can't even make sense because it carry inducement keep. Before it go do the break of structure, it form inducement keep for you. See, so everything we dey now not supposed to confuse you because you use one full day form inducement, break structure before it come back. If you go back to 1 hour time frame, you see this long week now where they see, so concern you. What it concern you damn now? The key level way close to your setup. Get for 1 hour now, what they see the QM where you mark, but for 1 hour, what they see as they form here QM A shape, you get inducement. You come back here, what they see now that A shape. 9 price extend, can't touch. So Your choice. If you want to maintain this key level here for entry, is fine. Your SL, if you want put SL here, go too big. Your SL, put the SL here, because already you are anticipating that price will reject a QM level. Price will reject a QM level and drop. Okay, and these are the key levels that are more closer to the inducement, so there's no point in going too far. You understand? Price will come, attack liquidity. There's no old imbalance here. You see, that's why I said it's not compulsory that there must be an imbalance to rebalance. Price attack liquidity, okay, at a to balance at a specific pricing level, and then boom, a return. Okay, attack liquidity to reject it at a specific pricing level and a return. From here straight to TP1, external internal range liquidity, TP2. You see another fuck up, why I say no today greedy, they wait for TP2, or rather collect waiting the market wan give you, they go. See this one now, else they form nicely, they come down. At the end of the day, still hit TP, reverse. Get. If you come back to daily time frame, if you don't take this trade, just dey observe the closure of every day. Dey observe the closure of every day. You go know wetin price wan do, or wetin price dey try tell you. If you look here, wetin you dey see? A key level. Wetin you dey see? A daily candle rejecting a daily key level. You no understand? A daily key level, and you go dey there dey wait for full TP. Yes, you are not wrong for waiting for full TP, because there's inducement here. You see, there's inducement here, there's key level here. You are not wrong for waiting for price to come to this place. But what did you see here? There's a key level here. There's also a one candle that can serve as inducement. You see, so a daily candle rejecting a daily key level, attack liquidity at a specific pricing level. A daily candle rejecting a daily key level. Go to 4-hour time frame. You see what? This is the day that rejected. On 4-hour time frame, what did you see? High, low, high, low, high, low, high. After rejection, boom, a break of structure confirmed. Can you see that? Break of structure confirmed. After rejection, a break of structure confirmed. So it's already giving you another setup. So instead of waiting for that full range here, just collect waiting the market they give you. If na 3 hour, 4 hour, 5 hour, collect, they go. Or if you want they anticipate for longer TP, try they monitor everyday price action to see where price they reject. You know, understand? See this one now, nicely 6 to 7 hour, you don't collect them. See here now, it rejects this level, give a break of structure. If you come back here now, on line chart, what did you see? These are your fresh levels. We have this H4. You understand? We have this H4. This one will serve as inducement, because now here as a reject, now here it close. See, break of structure. Okay. See here. This one now they look like QM here. You can even mark it like this again, just for you to be able to refine and get a perfect entry. You don't understand? Then you go to 1 hour time frame. On 1 hour time frame, you expand the chart properly and look at it. If it's confusing, go to line charts. We have a low here that was created. We have a low here on 1 hour H1. If price is coming, will price not hold on a higher time frame before considering lower time frame? Definitely. You understand? So what do you see here? 1 hour V-shaped key level. We have a 4-hour key level here that is aligning with a 1 hour QM. Adjust it, a 1 hour QM. Do you get? You can see this is where the break of structure is. All these other key levels here where price don't test like all of them are noise. Delete them. Delete them. You don't understand? Even this one where they serve as QM for that time frame, delete them. All of them are noise. We'll come back, use them as inducement. See, a noise. Use a whole day, do the breakout, come back, enter your POI. What do you see here? A fair value gap, a QM, a fair value gap. Do you get inducement? The closest key level to the what? To the inducement level is here. The QM or the main key level itself, which is happens to be this open close key level here. Do you understand? And you have a fair value gap here. So the tendency of price pushing lower is high. Why? Because price may want to come back, attack liquidity, rebalance and hold imbalance at a specific pricing level. Which pricing level? Here or here. You take your entry here, here or here. You don't understand? Take your entry. Even if it is here, you take your entry. It's still okay. Your SL now, carry your SL. You can leave it here or you leave it here, or just few pips below this place in case he wants to come for a retest. This is 19. Can just do 19.5 to 20 pips. You understand? For SL. Because not all weeks that price will have to drop down. There are higher time frames here. There are inducement that price has taken. It has no business pushing lower. You don't understand? Or better still, if you are not comfortable, leave it here. Expect price to do what? Rebalance and hold imbalance at a specific pricing level here. Boom. It's still okay. Take your entry. TP1, internal range. TP2, you extend. Do you understand? You extend as you like. You can target any high or you observe from daily time frame. TP2. Now look at this setup now. If for DJ now they wait for full range here, but it don't form another setup, it don't reverse, can't take out this one. Still they go. Still they go. It travel as far as 7 RR and it's still pushing. So you don't know how far a candle will go and how far or what's the length it will get to before it returns. So you can just observe from your daily time frame. If you look here, see here now, this counting now, we have a daily key level here. This price hits this key level. And we from here, if I just run, yeah, run from here, 3 RR, you are safe. Run from, because this place now, price feature decide to reject here, give you a break of structure on a 4-hour time frame, a clean setup to continue selling, which is completely correct, because still on the higher time frame, price is still doing what? It's still doing like this, doing like this, doing like, see, creating new highs. Maybe it might just be a retracement to push lower, which is still correct. You know that this market, you know, get anything wey you wan do wey dey wrong, just dey careful as you take do am. Your entry, your exit, collect 3 RR, dey go. But if you get stubborn head, you fit say you no collect o, you go dey just dey set break even, dey target bigger RR. Na your choice. But this is just the setup. This is just the setup. You understand? If you delete here now, all these things now, you look here. Let's see. Do we have anything here? You can mark this place. You can mark here. Let me use this one. You can still mark here as daily, rejects daily. You don't understand? You can mark here. You can mark where again? You can mark here. Did we reject on this key level? Yes, we did. You can see. You can see Friday, rejection, rejection in a key level. What do you do in this case? Just go to 4-hour time frame, go and wait. Go and check what is happening on 4-hour time frame. You know, understand? Price, what do you see price doing? Price was creating high, low, rejecting lows, breaking highs. You see, he hit this key level, he come back. You see, Amber, he break, but he no sustain, no close below. He come back, he do like this again. He come back, he hit here. You understand? He hit here. Now, as he hit here, he come back, close. You get? Let me delete this thing. If you look here now, what you go see? This a break of structure, a rejection, and a break of structure. A rejection and a break of structure. If you go to line chart, you see it. You know, see, this is a clear break of structure. The rejection now, see, blind and news could be discounting. We go take out, okay, take out the high, but now the high be this. Rejection and a break of structure. Now, even if you are looking at this high, because this high did not take out this high, this is now the rejection, abi? And then this is now what? The break of structure. You know, get a rejection and a break of previous structure. You know, get for price to come back and dump. As soon as price rejects, we break structure. Wait till you see. You go back. We have what? We have A-shaped key level here, which has been weaked before. A key level that has been tested, price can still test it, but preferably, unless in the absence of a fresh key level. You see, you just mark key levels. That is just for you to have an idea of what you are looking for, what you should be looking for in a lower time frame. You see, go to 1 hour time frame. You can see price hit here, drop, come back, drop, come back, enter all these zones like this, drop. See, this day was absolute a zigzag day, swing to Z day. You don't understand? But despite that, even if you had entry here, it not go take you out, because it take you out. A rejection and a break of structure. We had a break of structure. It came back and created its own words, created its own inducement here. Created its own inducement. You don't understand? Yeah. Created its own inducement here. Attack liquidity to rebalance and hold imbalance at a specific pricing level. You can use this what is it called? You can use this key level. You can use here. You can use here. You understand? But in this scenario, SL don't touch you, because unless if you have your entry to go short like this and SL will be up here. You don't understand? Which in rare cases you hardly do that. So maybe you will now have your SL here. So this one now don't go chop your SL. That's from the way the candles they print, saying a rough candle, but you don't take out your SL, don't play out, you don't give one, almost 1:3, they go. See. So it happens. It doesn't mean that you will not have SL, you have SL. So on Monday now, what you need to do is just to observe and see what price will do from here. Observe, because we have a buy side that has played out, we have a sell side that is playing out, so we don't know what price will do yet. You just observe and see which of the key level price is going to reject next and why, and where is price heading to after that rejection. Okay, just test it. You might find this very useful. This is a strategy you see everywhere. Your work is just to spot where price rejects. Look at this. A daily candle rejecting a daily key level and close. Just to make it sweet, we have inducement here, that a one candle inducement that the price attack liquidity to rebalance at a specific pricing level. Do you get? I'm not sure say we don't mark this example before. You see, daily reject this 23rd July 2025 rejected this key level and close. You go to 4-hour time frame. I will see this July, so fantastic. Go to 4-hour time frame. What do you see? Guy, this thing is sweet then. See, attack liquidity, rebalance and hold imbalance. There is all, most cases there's an hold imbalance resting somewhere. Attack liquidity, rebalance and hold imbalance at a specific pricing level, and then it close. So on this 4-hour time frame now, what do you see? Price was coming. This was the last high, a rejection and a break of structure. Can you see that? A rejection and a break of structure. After the break of structure, what do you have next? You have what? You have this V shape here, H4. You have this H4 V shape here. You have here H4 V shape here. Now, how do you identify your liquidity? Price need to give you inducements. Mind you, one candle can also serve as inducement. You don't understand? What do you see here? This candle was the inducement. This candle was the inducement. See, now I don't know if I go 1 hour to go check this setup. You guys see, because the charts go forward. October, I think that was July. Good, fantastic. This 1 hour. See, this can trade now. You could don't miss entry. Maybe like you could miss this entry. See, instead of price to dip lower, see it close here. Two what is it called? Two POIs. Attack liquidity, rebalance and hold imbalance at a specific pricing level. They expand. From 1 hour now, you would expect say price will come down to rebalance this holding balance, and at least even if it's this 1 hour A shape, even if it's this 1 hour A shape, may price come tap, they play out. See, it's normal to miss entries sometimes. It's normal because you just do what you can and you don't know what price you do. As a matter of fact, you can even be eyeing this QM here self, but you see, and that is why I said closest to inducement. He use this candle, tap and he move. As a matter of fact, he use even this other candle self, deep down, move. But unfortunately, if you position yourself here, you miss this entry. If you did here, you catch the entry. But me, somebody like me, I think I'll miss this entry, because me, I don't want to take this kind of trade and have what big SL like this. As how now, no. Instead, I'll wait here. If you know play out, make it a go. Another one will be from the same pair or from other pairs. And ever since from then, as price just reject that key level, see, and so it begin to fly. 16 RR external range. You see, external range. This 16 RR move. Now the fact say you miss this one now, e no mean say you no go fit still catch another trade. How? Go back to daily time frame. A daily candle must always reject another daily candle and give a continuation. You no understand? The fact say you no catch the entry here, e no mean. Just pay attention and see what happen. Okay, I don't think we'll have a trade here. Well, I think we'll have a trade here. We'll have a trade here. Okay, but not anyway, not before the external range. See, you just fly straight to external range, no any retracement or anything until this place. Now we have this open close key level. We have this candle rejecting on this open close key level. Look at it. Let's mark it. I think after this marking, I will end the video here. We have this attacking what? Attacking liquidity. Attacking liquidity, rebalance at a specific pricing level to give us what? Daily candle rejecting a daily key level and close. You understand? Now this is a sign to buy, not a signal, a sign. You now go to 4-hour time frame. Yes, this is it. 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 See how simple this thing just did. So this is the daily reject, daily and close. As he reject, what did you see? He reject by giving us what? A break of structure, breakout. A breakout. After the breakout, what did you see? What do we have? Mark your key levels. Mark your key levels. Mark your key levels. Mark your key levels. You know, go to 1-hour time frame. This thing too far. I know. Okay, I think I can still access 1-hour time frame. Breakouts. Key level. H4. Let's mark it. H4. 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 Abi V shape. Because if you come back here, this is what you see. And it breakouts. And it close. Good. Come back, it close here. So this close, okay, now here. Don't tap here. This one they go. This one they go. So these are the key levels. So you just go to 1-hour time frame and go and wait. Filter your entry where it is safe. Maybe this one. This is it. This is it. You see, a key level, a breakout, price came nicely. You understand? You look for inducement. This become your inducement because this is the opening price of the new candle. This become your inducement. You don't use this key level. Attack the inducement. Tap on the key level. Yeah. You go long. SL. You see how this daily rejecting daily key level can be very powerful. You see where is the external range? Did we make it to external range here? Yes, but obviously we not wait for it for this external range. You see, we not wait for it. Just collect what you can and go. It will give you another setup again. You get? That's it. That's it. So I hope you understand what I'm trying to show you here. Just backtest it, and you might find it very useful. Thanks. I'll see you in my next video.